Welcome back. Thanks for staying tuned into Trading Hour on CNBC-TV18. Now let's shift focus to the commodity space. And Manisha is joining in with us. And today we're going to be focusing on metals, base metals, specifically, Manisha.
Well, thank you for that. If you look at the metal prices itself, we've seen a smart rebound happen in case of copper prices, 1.5% higher on that. Some support is seen on aluminum as well, but the steel and the iron ore prices have continued to decline. There you can see the base metals are firm, and the reason for that is the China statements. So let me take you through the two sets of fundamentals or factors that the metals are trading with. One, it's all about the tariffs, of course, because US now has imposed 25% tariffs on aluminum and steel, and there is conversation about copper. And then US also has imposed 20% tariffs on China now. Total comes to 20 now. US and China are the largest trading partners as well, especially when it comes to metals there. And China is the largest producer and consumer for many of these metals. Now, importantly, the second set of factors is about the China NDRC meeting, where China has said that they are going to maintain GDP at 5% for the third straight year, by the way. And then the pledges to raise local government bond issuance to record levels. And then there is also 1.3 trillion yuan being issued for special treasury bonds there. More importantly, they would promote steel sector restructuring. Now, this is something that the China has been talking about for last decade, perhaps, but it does seem like this would happen now because all of these tariffs coming into being as well. Let me also remind you that 1 billion tons plus is what China does in sense of steel production. And there are expectations, while we still are awaiting clarity and numbers there, but nearly 50 million tons of potential reduction is what we could be looking at. But the big question that the street really is asking, one, what kind of impact would we see on prices on that? And two, if there is this tussle between US and China, does it really mean that much of this Chinese steel then would be coming into India? Let's pose those questions then to Aditya Welekar from Axis Securities. Mr. Welekar, hi, thank you so much for joining in. First of all, the steel restructuring that China is talking about, and we do feel the markets understand that this would come through this time around. What is your sense on that?
I think it's a sentimentally positive news. As you described, number one is on the China growth, GDP growth of 5%, which they have maintained. And another set which is positive is the fiscal deficit, which they have increased to 4%. The expectation was up to 3.5%. So there is a positive surprise on that. And higher fiscal deficit indicates that China is ready to focus more on infrastructure and other asset development. And coming to steel production cut, I think that is a major point which we have to look for. Although historically also we have seen several announcements by Chinese government that they will restrain steel production, but the kind of cut which we have seen was not very significant. But still, if you see over a period of 2020 to 2024, the steel output has been cut by 5.6%. So now there is a speculation that they will cut steel production by 50 million tons, which is still a speculation, and we will take it with a pinch of salt.
Sure.
But this, why this remains important is because with the tariffs and the global backdrop, the kind of exports which were coming out of China in calendar year 24, that was 20% year-on-year growth in exports, steel exports from China at 110 million tons, which is very significant, and it was putting a lot of pressure on ex-China steel prices, including India. So if the steel production cut materializes in China, that's a good news. And overall, the rally we have seen today in metal stocks is, as you have described, due to this economic data from China, which is reinforcing confidence. And at the same time, the valuations were at the mid-cycle level, were not very compelling, not very demanding. So these are the reasons we have seen some relief rally coming today.
So Aditya, while you've discussed both the scenarios, that it yet needs more clarity in sense of number, but if we do see that 50 million ton, one, what it would mean for India in sense of its exports, and the other fear on whether with all of this US and China tussle, would India again become a dumping ground, though enough steps have been taken or measures have been taken by the Indian government in that regard. But is that a fear that you would allow to?
That fear will remain because we, as I said, means we will have to monitor whether they really materialize. We have to see the monthly production data from China, how they cut their steel production, and whether that materializes. And Chinese prices are still at a very competitive level, and the export they dominate the export market, putting pressure on the domestic steel mills. What we have to see is whether this safeguard duty of 25% is what is expected from the government, and what the local steel mills have proposed to the government. That still is still in the process, and we have not heard so far anything on that. But overall, the space remains competitive, and the steel coming out of China is still at a much higher level. And the key trigger will be the restraint on exports, and that will only be driven by if the China reduces its domestic production, because its domestic consumption is not going to pick up in future, because the property sector is still has almost stagnated now. Although they are trying to stabilize the property sector, but the kind of growth we have witnessed in the previous decades, we may not see that in coming decade. And that is the reason the reduction in steel production is quite critical as far as steel industry for India and the rest of the world is concerned.
Aditya, that point is well taken. So my final question really is about the kind of price moves that we have seen. We do understand that these are volatile times, and every day there is new data and statement and retaliation and reciprocal tariffs to react to. So how would you count the day as today, and what is it that you would look forward to now for the coming days?
So as far as steel prices are concerned, I guess both long and flat product prices, especially flat product prices, they have kind of bottomed out, we can see. We don't foresee further downside to flat prices from the level which we have seen, the fall which we have seen recently. And with the pickup in overall activity and whatever China is saying, if they stick to that, then I think the prices should not fall from the level which we have seen. So that is our view. We are keeping our forecast of steel prices flat, and there is an upside risk for prices to rise ahead.
Okay, Aditya, thank you so much, for joining in with us and giving us an understanding on the metal space and what we should be expecting also in terms of the recent updates coming in from China's front. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. After the break, we'll discuss market technicals with Nitesh Thakkar. So do stay tuned in.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.